Global recession underway, will get worse before it gets better.
What could potentially trigger a collapse of the global economy? Welcome back to Finance Zoom. In today's video, I'll dive deep into the thought-provoking insights shared by Jim Rickards on this critical topic. I'll break down his viewpoints into three essential sections: the fragility of the global economy, the impending banking crisis, and its implications for individuals and nations. Are you ready to delve into the details? Let's get started. The New York Times latest forecast. Global economy shows signs of resilience despite lingering threats. The International Monetary Fund upgraded its global growth forecast for 2023. Reflecting on the current economic landscape, the New York Times presents a forecast that portrays a picture of resilience within the global economy despite persisting uncertainties. The International Monetary Fund's upward revision of its global growth projection for 2023 signals a degree of confidence in the recovery trajectory. However, a subtle shift in the tide is anticipated, as the IMF anticipates a potential decline in U.S. consumption. This projection stems from the expected drawdown of American savings and the ongoing trajectory of rising interest rates. These developments underscore the delicate balance between economic revival and potential challenges, painting a dynamic backdrop against the backdrop of the collapse of our global economy.
How they do that synthetically, again, to apply to capital markets. Because capital markets are a complex dynamic system. So we've had 60 or 70 years. I mean, complex systems have been around since the Big Bang. That was one of them, so 13 billion years.
Jim Rickards' insights provide a stark wake-up call, underscoring the contagious nature of financial turmoil. His analogy of contagion, where financial instability can jump from one sector to another, raises pertinent questions about the interconnectedness of our economic systems. The rapid spread of rumors and panic, facilitated by social media and electronic banking, amplifies the potential impact of such instability. With his wealth of experience in credit derivatives, Rickards vividly portrays the accelerated pace at which bank crises unfold. From Credit Suisse's downfall to the compressed timelines of crisis, the fragility of financial institutions becomes evident. He brings to light the disparity between those who fully comprehend these complexities and those with vested interests in obfuscating the truth. Jim Rickards' consistent warning signals about our global economy's vulnerabilities carry significant weight. His focus on high debt levels, volatile markets, and geopolitical tensions serves as a reminder that the financial system is far from impervious. Through his insights, he urges us to assess these warning signs critically and recognize the potential for seismic shifts in the economic landscape. Rickards compels us to be proactive, prepared, and vigilant in the face of an ever-evolving global financial landscape. Now, we'll take a closer look at the three important parts of this topic.
So what that tells you is there's a collateral shortage. That means deleveraging balance sheets. It means financial distress. And we also see it not just in the Treasury yield curve, which is inverted from right now 6 months to 10 years, but also the Euro-dollar futures curve, which is even more troubling. It's not unprecedented, but it is rare, and it's not a good sign. But the Fed continues, raising rates in the teeth of this really bad data. So I look for a severe recession in the U.S., really global, because your question was, how's the global outlook? It's pretty bad. Maybe something closer to social unrest and riots in Europe, and then on top of that, possibly a global financial liquidity crisis worse than 2008.
Number 1. Fragility of the global economy. Jim Rickards' sobering prediction sheds light on the delicate state of the world economy. His warning of a possible collapse in 2023 draws attention to worries like debt levels, trade imbalances, and global tensions. This perspective encourages us to closely examine the weak spots that could trigger a massive breakdown of our interconnected economic system. Jim Rickards points out something crucial that often goes unnoticed in the chaos of global events. He makes us realize that the battlefield isn't just about physical conflicts anymore. It extends to money matters and economics. The idea of a financial war becoming a significant player in shaping world politics is fascinating and thought-provoking. Jim's analysis prompts us to think about the complex dance between financial tactics and political goals. His comparison of this situation to a disease, driven by an obsession to control outcomes, makes us see how financial moves can have far-reaching effects, even swaying elections. This fusion of economic and political forces is a reminder that the way power is used and decisions are made is changing. Jim Rickards' exploration of the changes in our global economy isn't just about growth and decline. It also involves battles for information, intricate money moves, and leadership dynamics. This realization gives us new insights into our fast-changing world, where inspiration, connections, and change become vital tools for navigating the complex global landscape.
And then they started hiking rates in March. On March 1st, the policy rate, the Fed funds target rate, was 0. Today it's 4.25%. It's going to go up another 50 basis points.
Number 2, the impending banking crisis. Jim Rickards' assertion that the banking crisis is only beginning is a sobering reminder of the vulnerabilities within our financial institutions. The impact of a banking crisis can reverberate across economies, affecting businesses, individuals, and even governments. Rickards' warning prompts us to consider the stability of banks, the effectiveness of regulatory safeguards, and the potential chain reaction if a major institution falters. Rickards delves into the recent turbulence within the banking sector, weaving a narrative that echoes his extensive financial experience. His insights resonate as he navigates today's global economic terrain complexities. His historical parallels spotlight recurring patterns in financial turmoil, underscoring shared dynamics that transcend time and situations. As Jim reflects on his observations of crises over the years, it's clear that historical lessons are relevant in the current chaos. Rickards' emphasis on the interconnected nature of crises and their amplifying consequences directs our attention to the cascade effect that financial uncertainties can trigger. He poses a crucial question. Are we approaching a point where central banks might find their resources depleted, pushing the limits of their ability to rescue? The recurring cycle of crisis begs a crucial question. Have central banks depleted their bailout capabilities? The Silicon Valley Bank's colossal rescue amplifies this concern. We're nearing a critical juncture where faith in currencies, like the dollar, diminishes, leaving bailout strategies ineffective. While history lends insights, today's crisis possesses distinct facets. Regulators confront intense scrutiny while navigating this unfolding tempest. Jim's assertion about the Silicon Valley Bank bailout's historic magnitude raises red flags about sustainability. His query on central banks' potency to quell crisis resonates. The notion that the crisis could morph into a currency crisis, eroding trust in stabilization systems, adds gravity. Reflecting on history to illuminate modernity, Rickards offers a glimpse into potential global economic paths. His cautionary perspective on cyclical financial crisis, intertwined with global interconnectedness, urges revaluation. This discourse emphasizes the need to grasp intricate financial political dynamics, reinforcing the call for a broader lens to decode the intricate global financial dance.
You couldn't have inflation and recession at the same time. You could have inflation and high nominal growth, or you could have a recession and no inflation, but somehow you couldn't have no growth or a recession.
Number 3, implications for individuals and nations. The collapse of our global economy holds significant implications for both individuals and nations. It can lead to widespread unemployment, market instability, and declining living standards. Individuals may face financial hardships, while nations grapple with reduced economic output and strained social systems. This crisis underscores the need for proactive measures, contingency planning, and diversification of assets to mitigate the fallout. The interconnected nature of our world necessitates coordinated efforts to navigate these challenging times and safeguard the well-being of individuals and nations. Jim Rickards' insights illuminate the potential repercussions of a global economic collapse, resonating with the theme of an imminent crisis. He warns of an unprecedented global recession, uniting economic powerhouses and underscoring their interlinked vulnerabilities. These economic giants' simultaneous struggles underscore the gravity of the situation, with recession looming large. Rickards' novel examination of coexisting inflation and recession challenges conventional norms, prompting reflection on our complex predicament. Rickards predicts a worsening of the global recession before any possible recovery in this intricate landscape, emphasizing the complex interplay between soaring inflation and rising interest rates, intensifying the downward spiral. Amid this complexity, Rickards' insights stand as guiding lights, candidly assessing the elements fueling global economic instability. His analysis underscores the need for proactive measures and a comprehensive grasp of the multifaceted forces at play. In conclusion, Jim Rickards' bleak projection for 2023, a global economy collapse, and a brewing banking crisis, compels us to reckon with the vulnerabilities present in our financial landscape. Considering the fragility of a global economy and the potential fallout from a banking crisis, it becomes evident that proactive measures are essential. Staying informed, fostering economic resilience, and advocating for prudent financial practices are critical steps as we navigate these uncertain waters. That wraps up today's discussion. Please share your thoughts in the comments section if you found this information valuable. Remember to like and share this video with others. And if you still need to, hit that subscribe button to stay updated with my upcoming content. Stay informed and connected. I am looking forward to our next discussion.